Hello, this is Ronnie Velasquez, and today I'm going to teach you the seller's net sheet. And I just want to remind you that I spent sufficient time talking about the seller's net sheet during my listing presentation class, which is held on Saturdays at the training center. So if you want more information about that, let me know. So once you get the seller's net sheet from Google Drive, you're going to have to download it by clicking on the button that says download, which is going to start downloading it. And then you have to enable editing. If you do not enable editing, then you're not going to be able to make changes to it. As you can see here, the seller net sheet is pretty much completed. All you have to do is put your picture in here, your name, phone number, your mailing address, your BRE license number, the name of the seller, and the property address. So what we're going to do here is that we are going to put the sales price, or the recommended sales price for the property. In this case, let's start with something around 550,000. Okay, oops, not 55, 550,000. And then let's say that that person owes $315,000 on their first mortgage. Now, if they have a second mortgage, you can put it in there. If you have a prepayment penalty, you can put it in there. And what also you can put in there is any other cost that is associated with paying off that mortgage. If they have judgments, liens, or things like that against the property, you can, and you're aware of them, you can put them in there. So the next thing that you see here is you see all the costs of selling the property. We start with the home warranty. Now, I want to remind you what I said during the training. If the seller is not willing to pay home warranty, what you need to do is you need to come here and zero out that amount, and obviously the table will change accordingly. Okay, so if you want to do that, you can do that as well. So all the calculations have been made already in there. What I want you to do is I want you to double verify the calculations to make sure that they are in accordance to what you think are correct. The home warranty, for example, a home warranty, if the seller wants to pay for it, it can run anywhere between $240 to $650. Sometimes it's a little bit more if it's a duplex, triplex, or commercial property, so you might want to check on that. But usually it's between $240 and $650. The documentary stamps, if you're looking at properties that are sold outside of Los Angeles County, that is to say Riverside County, San Bernardino, and Orange County, the cost is $1.10 per thousand. If you're selling the property in Los Angeles County, you need to come here and change it to $5.60 per thousand, because that's the cost in Los Angeles County. Title insurance policy and escrow fees are already pre-calculated, but I would ask you to refer over to the schedule so you can verify this information. What you can do is you can go to Orange Coast Title. Let me open here Orange Coast Title for 1 second. So you can go to OC Title, OCTitle.com. And once you go here, you can see here where it says try your rates and fee calculator. You can put the zip code of the property. Let's try this one here, and this is going to be a purchase. The purchase price is going to be $550,000, and they owe $325, I think I said. 1 second, $315,000 on the property, and it's going to give you the amount. So you may want to double check that information and make sure it's calculated correctly. So in this case, it says that the standard policy is $1,447. The Alta policy is $1,592. So as you can see here, my calculation is between $1,425 to $1,950. So it's kind of in the ballpark, but you want to double check that information. Termite inspection and repairs. This one really depends on how much repairs are on the property in regards to termite, and if the seller is going to be willing to pay for those termite repairs or not. I put 0 to 3,000, but you can change that, and let's say it doesn't need $3,000, it only needs $500 in repairs. You can just change it there. Natural hazards reports cost between $75 to $125. Prorated interest on the mortgage, because they will be closing sometime in the month. Usually transactions don't close right on the 1st of the month. They usually close between the 1st and the 15th, or the 15th to the 30th. So there's going to be a little bit of interest prorated that they're going to pay on this property. And then you have a reconveyance fee. That's how much the lender charges for closing their loan when they're paying off their mortgage. So you have a lender's demand and the reconveyance fee. Those are the charges that their current lender charges in order to close the file. Then you have property prorations for property taxes. You have a transaction coordination fee. You have a notary fee. and obviously some miscellaneous fees. And you also have closing costs for buyers if the seller is willing to pay closing costs for the buyers, and you have a cooperating real estate a marketing fee and a cooperating broker fee, 3% and 3%. And the last part here that I want you to be careful with is in regards to the tax withholding. In regards to the tax withholding, if this is a property that is an investment property, that means it's not a owner occupied property, or it's gonna be taxable by capital gains, because sometimes properties can be taxable for capital gains depending how long have you live in the property and whether or not that property is owner occupied or not. Then you will have a tax withholding. Now there is 4 ways of calculating tax withholding, and the most simplest way is to the formula of the 3 1/3. That means that you will take the profit and you will multiply by 3 1/3, and that will be the tax withholding. But there is also another 3 ways of calculating tax withholding, which I'm not gonna go into right now because it's completely it's very complicated. So it's better if they talk to their tax accountant in order to find out exactly how much the tax withholding is gonna be. So with that said, if you want to use just a simple formula, then you can do the tax withholding right here, and that will be $6,000 of tax withholding. So that gives you a pretty fair estimate of how much they're gonna net out of the sale of this property. Now you will notice that there's 2 columns in here. There's a range from and a range to, because the cost of sale of property is not fixed. It varies depending on the day of the month that you close the transaction, the month of the year that you close the transaction, the county the property is located, whether or not they have a mortgage, etc., etc. It's just too many variables in there. So what I have done is I created 2 columns, the one with the least amount of expenses, the one with the most amount of expenses, and I always tell the sellers, you're gonna net out of the sale of this property somewhere between $183,000 and $187,000. Somewhere in between those 2 numbers, that's where your check is going to come out with. Because if I give them a single amount, let's say $187,000, at the close of escrow, they're expecting a check for $187,000, and if they get a check for $183,000, then they're going to be asking me what happened with the other $4,000. Who's going to pay me that money? And that's a conversation I'd rather not have. So I make sure to tell the sellers that the cost of sale is going to be between this amount and this amount. They're going to net an amount of money between this amount and this amount, and it's never fixed. So there you have it. This is the seller's net sheet. Use it at your convenience. Once again, like I said in my training, I don't guarantee the results. They're fairly accurate, like 90% accurate, but you have to double check the quantities, and ultimately it is your responsibility to make sure that the numbers are correct. This is a small video, but I spent about an hour in my training on Saturday explaining the seller's net sheet. So if you have any questions, give me a call, contact me, email me, poke me on Facebook. My information is below. Thank you so much. Bye-bye.